Hey guys, what's going on? Welcome back to Stocks with Surfing. So today I want to talk about a company that I actually don't hold in my public portfolio, and that company is ASML. So to be fully transparent here, I do own ASML in my personal portfolio. I'm up about 85%. So this has been a very good performing stock for me. And as you can see, it's had an absolutely insane run up. Over the past year, it's up 78%. Over the past month, it's up 28.65%. This is a stock that has made a lot of people extremely wealthy. So let's talk about ASML. ASML is a Dutch multinational corporation that specializes in the development and manufacturing of photolithography machines, which are the essential tool used to mass produce integrated circuits or microchips. To create a modern microprocessor, manufacturers must transfer a circuit design onto a silicon wafer. ASML achieves this through a process called extreme ultraviolet lithography. The machine operates by directing a beam of light with a wavelength of 13.5 nanometers through a template of the circuit. This light reacts with the light-sensitive coating on the silicon wafer to chemically print the circuit pattern. Because the wavelength of UV, extreme ultraviolet light, is so short, it allows for the creation of features only a few nanometers wide, enabling billions of transistors to fit on a single chip. All right, now this is the fun part for investors. ASML is currently the only company in the world capable of manufacturing these lithography systems. Semiconductor foundries such as TSMC, Intel, and Samsung must purchase these machines to produce the logic and memory chips required for high-end computing. Without ASML's hardware, the production of 5 nanometer, 3 nanometer, and 2 nanometer semiconductor nodes is physically impossible, making the company the primary hardware provider for the entire advanced electronics industry. Now, if you're an investor, this is amazing news because you love monopolies, and that's exactly what ASML is. Without ASML, NVIDIA could not create their AI chips, Google could not create their AI chips, your phone probably wouldn't work because ASML went into creating that. ASML went into creating the very device that you're watching this video on, most likely. Now let's talk about why the stock has moved into these extreme degrees. Over the past month, it's up 28%, which is absolutely insane. So let's take a look at why. This rally is being driven by a massive double whammy of good news. First, there's record-breaking results from its biggest customer, TSMC, Taiwan Semiconductor, and a wave of aggressive price target hikes from Wall Street's top analysts. The momentum shifted into high gear this week after TSMC announced a staggering $52 billion to $56 billion capital spending budget for 2026, a 32% increase from last year. Since ASML is the only company that can provide the EUV machines TSMC needs for this expansion, investors are viewing this as a guaranteed multi-billion-dollar payday for ASML. At the same time, analysts at JP Morgan and RBC just slapped a massive new price targets on the stock, up to $1,500 and $1,550 respectively, suggesting that even at record highs, there is still a 20% more upside to come as the AI chip supercycle takes full flight. Now, I think the TSMC news is really great because for those of you that don't know, Taiwan Semiconductor is a company that just manufactures for companies like NVIDIA, and they do advanced microchips. Now, for them to do advanced microchips, they don't use their own machines, no. They have to buy them from ASML. So TSMC only really exists because of what ASML creates, which is absolutely phenomenal if you're ASML. All right, so moving on, let's take a look at the financials of ASML. So here's a chart for the current revenue growth of the company. Now for clarity, 2025 is expected because they still have one more earnings release in their fiscal year 2025, and all of 2026 is simply projected forward. Now the chart in front of you is 2023 to 2026, but if you go back and look at 2021 to 2026, the 5-year revenue compound annual growth rate for ASML is 14.4%, which is absolutely phenomenal. The next metric I want to look at is very important, and that's actually the systems that ASML has been able to sell. So as you can see, in 2020, they sold 258 new or used systems. And then in 2024, they sold 418. So over time, obviously there was a little bit of a dip in 2024 compared to 2023 new systems, but overall the growth has been pretty good. And especially if the AI cycle continues the way it has, and all these new onshoring projects in the US, like Intel in Arizona, TSMC in Arizona, I think there's one in Ohio being built as well. These are all going to be significant amount of systems that ASML is going to be able to build. And once again, you know it's going to be ASML building them because they're simply the only people who can. But having a big system install base for ASML helps them in more than just sales. There's actually another extremely exciting revenue source I want to talk about, and that's service revenue. So since these ASML machines are so extremely complex, ASML, the company, is the only people on the planet that are specialized enough and have the know-how to actually be able to do maintenance to these machines. And not even that they have the know-how, it's that in the contract they're the only people how to do maintenance to these machines. So as you can see, as the install base goes up, install base management revenues also tend to move up. Now, this is a great thing for a couple reasons. First, it has a safety net effect. In 2024, when total revenues only grew by 2.5%, the service business grew by 15.5%. This proves that even when companies stop buying new machines, the transition year, they still have to pay ASML billions to keep their old ones running. It's the ultimate recession insurance for the stock. And as you can see, in 2025, there was an upgrade spike. It has a massive 26% growth rate. This wasn't just basic maintenance, it was a software supercycle. ASML sold productivity kits that allowed customers to boost their existing machines from 160 to 220 wafers per hour. This is almost 100% profit because ASML just sends a technician with a laptop and a few small parts. Now, as we move into 2026, the service revenue becomes even more valuable. The new High-NA EUV machines are so complex that the service contracts are significantly more expensive than older models. As more of these monsters are installed, the baseline for service revenue shifts permanently higher. So even if the AI bubble pops and companies don't feel a need anymore to go and buy new ASML machines, ASML will still be getting service revenue from every single one it has in the wild. It's really powerful because the more of these things they get installed, the more total sales they have, the more extremely high margin revenue service fees they're going to collect. All right, now let's get right into my ASML bull case. So number one is the monopoly lock. ASML is the only company in the world that builds extreme ultraviolet EUV lithography machines. If a company like NVIDIA, Apple, or AMD wants to make a cutting-edge AI chip, they physically cannot do it without ASML's equipment. There are no competitors. It is 100% monopoly at the highest end of the market, the High-NA supercycle. So the industry is currently transitioning to High-NA EUV, which are even more advanced machines costing roughly $380 million each. Early adoption. Intel has already completed testing for these machines to build its 14A node, and major customers like TSMC have already booked their capacity for 2026, meaning ASML revenue for the next 12 to 18 months is largely locked in and predictable. Third is the shift from growth to scarcity. In 2026, the bull case is no longer just about AI hype, it's about physical scarcity. As big tech companies like Microsoft and Google spend over $400 billion on AI infrastructure, the ultimate bottleneck is how many chips can be printed. Because they are the only supplier, ASML can maintain margins projected at 52-53% for 2026, which are insane margins. Even if the cost of parts goes up, the geopolitical upside. While China's sales are slowing due to export bans, countries like the US, Japan, and Germany are spending billions to build their own local factories, fabs. Every one of these new factories must buy ASML machines to be relevant. And I think that's a good point, right? Because, China's sales are slowing because of export bans. Every country wants to have AI onshored because they don't want to be reliant on anybody. So that means every major government around the world is really going to try to be doing business with ASML. Now let's look at the bear case for ASML. The China cliff and revenue air pocket. For the past 2 years, China has been panic buying older DUV, deep ultraviolet machines to get ahead of sanctions. This drove China's share of ASML's revenue to a massive 42% in late 2025. The problem? Management has officially warned that China sales will decline significantly in 2026 as export bans and mid-range tools take full effect. Non-China growth, AI and 2 nanometer may not be enough to fill this multi-billion euro hole quickly enough. Analysts from Jefferies and Barclays have noticed that ASML's backlog coverage for 2026 reached a 3-year low in late 2025. My second point is adoption friction for High-NA EUV. ASML is betting its future on the new High-NA EUV machines, which cost roughly $380 million to $400 million each. The problem? These machines are so expensive that some customers are hesitating. TSMC has explored double patterning on older and cheaper machines as a way to avoid buying too many High-NA units early on. If the cost per transistor of these new machines doesn't drop fast enough, ASML could see lower than expected adoption, leading to a margin compression as they continue to spend billions on R&D for a product that isn't selling at a high volume. So that wraps up my video here on ASML. I think my final thoughts on ASML is it's a tremendous company, and as someone who bought it significantly cheaper than it currently trades, I plan on holding it forever. But if I were to get into the market right now, I would personally not buy ASML because the price seems pretty high. Although it is a monopoly at the highest end of the market, I think ASML is a tremendous company, and I don't think there's a whole lot of real reason to be worried about it. I think it has a strong business model. I think the margins are going to stay strong with the revenue, with the, as they build out more units and get more maintenance fees and upgrades. So I'll see you guys in the next episode. Take it easy. And remember, nothing you heard here today is financial advice. Peace.